Welcome to Crypto Horizon, the channel where we talk about cryptocurrencies and continue our quest to become the ultimate crypto master. Today's video is very basic about money and how the concept of money changed over time that basically led to the birth of Bitcoin. Understand that this is not a full on Bitcoin origin story, but basically gives a brief view of what led to the introduction of Bitcoin. So let's get started. The concept of money goes way back in history. Money is a medium of exchange, anything that is commonly accepted by people in exchange for goods and services. Back in 6000 BC, we had the barter system, which is the oldest medium of exchange. Very simple, people exchange goods and services for other goods and services in return. Then in 700 BC, metal coins were introduced, and later in 550 BC, gold coins were used as currency. Money basically has kept evolving ever since. After the US won independence from the British, the new constitution gave Congress the exclusive right to coin money. Under the Coinage Act of 1792, also known as the Mint Act, the United States Mint was created by Congress. The task of the mint was producing and circulating coins in the country. The US dollar also became the official currency of the United States at this point in time. While the US dollar was the official currency of the country, other foreign currencies could still be used to purchase goods and services. This basically changed with the National Banking Act of 1863, which made the dollar the only legal currency of the United States. The US dollar was pegged against silver at this time, but due to the discovery of large deposits of silver in the late 19th century in the United States, the value of silver dropped rapidly. It was at this time that it was decided that moving to gold standard would be a safer way to ensure confidence in the US dollar. The currency value was now tied to the gold in the government vault. This is called the gold standard, wherein if a government wanted to print $20, it needed to have $20 worth of gold in its gold reserve. While the gold standard was seen as a stable system of currency, it later became clear that it would not be the case if debts or wars affected the economy. The Federal Reserve Act of 1913 introduced the Federal Reserve, a private bank, as the keeper of America's economic and monetary policy. The Federal Reserve and its alternative views of currency marked the beginning of the end of gold standard in the US. Then came the Great Depression of 1930. During the Great Depression, the United States of America printed all the money it legally could to pump life into the economy. Since the United States was on gold standard, they printed all the money they could until they reached the gold limit. They had to print more money to sustain the economy, so here's what they did. All the citizens were asked to sell their gold to the Federal Reserve at a fixed rate. Gold started flowing in, but it was not enough. Next, they asked the foreign governments to submit their gold reserves to United States and offered to pay a higher price for it as well. The foreign nations bought into the idea and huge amounts of gold started flowing into the Federal Reserve. At one time, it is said, the United States of America had almost half the gold reserves of the whole world. The other side of the story was that the gold that the US was buying was actually paid for in US dollars. This also led to the US dollar being spread across the globe. To prevent people from withdrawing deposits and in the process depleting the gold supply, the US and other governments had to keep interest rates very high. But that made it very expensive for people and businesses to borrow. So in 1933, the United States decided to do away with gold standard. This allowed the government to print more money without limitation, pump money into the economy, and lower the interest rates. Please note that here on, the dollar was backed by nothing but the full faith and credit of the United States of America alone. The whole meaning of money now was trust. In 2008, the subprime crisis hit the world. The financial crisis was caused by unscrupulous investment banking and insurance practices that passed all the risk to investors and often kept them in the dark. This was the time when people felt a need for transparency and decentralization in banks and financial markets. Then, in 2009, a white paper by Satoshi Nakamoto introduced Bitcoin. Please note that the financial crisis of 2008 was not the reason why Bitcoin was created, nor was it a response to the financial meltdown. The subprime crisis basically showed us that certain people were controlling the market and that they screwed up. and that there was a very good chance that they will screw up again in the future. Now, more than ever, we needed a medium of exchange that could not be controlled by anyone. The white paper spoke about the concept of decentralized ledger. Bitcoin, from a purely finance perspective, is a distributed ledger, and because it's distributed, no single person is in control of it, and therefore there is no opportunity to manipulate it. It created a virtual currency governed by the blockchain network. So, what is blockchain? A block is simply a chunk of information, a record of something like how much money you have, your contact information, etc. etc. When it comes to money, that record is called a ledger. Let's say you have $10,000. If something happens to change that record or ledger, maybe you buy something that cost $1,000, a new block will be formed altogether, and the first block will be linked to this new block. The blocks can't be opened and the links can't be broken because these are codes that are incredibly difficult to break. So that keeps the information safe. But a blockchain includes yet another level of security. Instead of being tracked in one central place like a bank, identical copies of the blockchain are stored on thousands of independent computers, all of which can actually talk to one another. It is called a decentralized network. And with each new block, the chain is updated in every single computer on the network. In terms of financial or money matters, like I've said before, this is referred to as ledger. In Bitcoin language, it's going to be termed as a distributed ledger. Now, if someone wants to tamper with the information in the blockchain, they not only have to break these nearly impossible codes, but they also have to figure out a way to change the information in every computer in the network. The distributed ledger is theoretically both secure and transparent because everyone can see it, and if anything fishy or weird were to happen to the block, the whole network can be made aware of the same. Okay, so all that is great, but what really is Bitcoin? Bitcoin is a decentralized digital currency that you can buy, sell, and exchange directly without any intermediary like a bank. It is an electronic payment system based on cryptographic proof instead of just trust. Fiat money like the US dollar, Japanese yen, or Indian rupee is backed and regulated by the government that issues it. Bitcoin, on the other hand, is powered through a combination of peer to peer technology, which means a network of individuals, and software driven cryptography, which is the science of transmitting secret information that only be read by the sender and the receiver. This creates a currency backed by code rather than items of physical value like gold or silver, or even worse, by trust in central authorities like the US dollar. The understanding is that central bank continuously printing more and more money will lead to inflation or a decrease in the value of money over time. Just to give an example, Venezuela is facing hyperinflation today, where the yearly inflation rate has reached above 2700%. In comparison, India has an inflation rate of 7.6%. Bitcoin has a fixed limit or a limited supply of only 21 million coins that can ever be created or ever be mined. This limited supply allows Bitcoin to resist inflation. El Salvador's adoption of Bitcoin as a legal tender has got the ball rolling for other countries to see. Only time will tell if other countries also start buying into the idea of Bitcoin. All right, so that's basically it for this video. We wanted to talk about the origin story of money, the transition of money from one period to the other, and the origin story of Bitcoin. I think we've been able to do that. If you like this video, do hit the like button and consider subscribing to the channel so that you don't miss out on the upcoming videos. Thank you for tuning in, and I will catch you guys in the next one.